Hello everyone, so you are welcome to Triumph Trust FX channel. This is the second part of the video on this strategy. As I promised, so in this second part we'll be talking about the second type of entry on this strategy. All right, so on this second part, the other criteria, the criteria that was stated in the first type of entry are valid, but they are taken in a different way. So initially, we said that we have about 6 criteria, plus the entry is what make it 6 criteria. So the first criteria is we want to see an impulsive move, right? We want to see an impulsive move. And secondly, we want to see price at a key zone. Then we want to see liquidity graph, or a stop hunt. Then the fourth one, we want to see a break in market structure and the key zone retest. So in the first video, I've already given you the list of the key zones. So the next thing is we have the TDR confirmation. Then finally the entry. So I've already given the list of the the key zones in the first video. So you can do well. It is very important you watch the other video because that is where this method is explained. So this is a second type of entry. We're just going to discuss the second type of entry on this video, and I'll also give you another bonus entry that may that do occur that is also highly profitable. So we want to see an impulsive move, price at a key zone, and our key zones we talked about yesterday's high and low, weekly high or low, the 800 exponential moving average, the 200 exponential moving average, and the yesterday's New York session high or low. Those are the key zones. So let's move over to the second type of entry on this strategy. So I will start with looking at GBP JPY. This episode of happened on Friday on GBP JPY. Okay, look at it. So we say we want to see an impulsive move, which is what happened here. To a key zone, we have the 200 exponential moving average, so we have an impulsive move. So we see price move away from this zone. The next thing we are expecting is a liquidity grab and a break in market structure. So what happened here? Price moved away from this zone. There was no liquidity grab. So we see price came back down and took out liquidity. When price took out liquidity, the next thing we are looking for is a break in market structure. So at this point where price took out liquidity, this is where we're looking for a price to come and take out as break in market structure. But see what happened. Price moved away after the liquidity graph, created a high here, and came back to retest the zone, the key zone. It's okay, it's actually below the key zone. So where we want to see price coming back to where it took out liquidity to retest that area. So price came back here to retest it after creating this high. What happened? Price moved up and closed above this high, which is the breaking market structure. So if you look at this point, you have that your TDR is already the green line, which is the RSI line, has already crossed the red line. And during this retest, see what happened? It created this drop down and move away. It did not break the signal line. So this is a good sign that this market will continue to go up. So at the break of this market structure here, this is your entry. You get that? So we want to see liquidity graph, price create a high, came back to retest the key zone and the liquidity zone, and we see price break this structure, market structure. At this point, you take your entry. Stop loss at this liquidity grab level, and your take profit, you're using 50 yesterday's high, and every other key zone you see above you. But please ensure your take profit target is 20 and above, 20 pips and above. You understand? So let's look at another pair, GBP USD, of a similar entry type. Look at this. We see price drop, see impulsive move, and price came here, break out liquidity, took out liquidity. Price came to a key zone here and even traded below it. And at this point, this is where we have the liquidity gap. Price move in and move out immediately. So when price moved away after taking liquidity, it created a high here. So and came back to retest the liquidity zone. As price goes up to break above this swing high, this small high that it created, you take your entry. Take profit 20 pips and above. You can use your key zone to also take your profit. You understand? So we want to see price come with an impulsive move into a key zone, take out liquidity, create a high, came back to retest the liquidity zone, and to move away. We'll follow the price. And in one of our strategies, I've talked about this hidden order block. So this hidden block is a very good confirmation that this price will continue. When price moves away from the zone and creates this, you can take your trade as a candle closes above this opposite candle. It's a very good confirmation. Let me see if it happened on the GBP JPY. Yeah, during the move of the GBP JPY, okay, it didn't happen, but this is when it was kind of formed, but it was too late for you to take trade at this level. But we have our entry here already. So let's also look at BTC USD, Bitcoin. It happened here. Price drop with an impulsive move to a zone, a liquidity, a key zone. We have the 200 exponential moving average as a key zone. We also have the yesterday's New York low as a key zone. It took out liquidity actually. It took out this low and moved backward, back immediately to this pin. So we expect this price to create a high, come back to retest the zone, break above this high created, then we take our entry. But one thing I must warn you, once that a high, the swing high is very high, is too for you to enter a trade and it is going to give you a bigger stop loss. Please ignore that kind of trade. We are here to trade to make profit. So when price move up to this level, it could not even take out this. It did not take out this high, and the high it created was very high. On coming back to retest this key zone, what happened? We see price taking out liquidity again to the downside. So after they see the push and price returned back, creating this high. So price came back to retest the zone, the liquidity zone, came back up to break this swing, the small swing high created. On the close of this candle, with the confirmation of the RSI line crossing the signal line already, and above the yellow and the red, we take our entry. And that is it. So that is the second type of entry. So I would also advise you, if you can pick out of these two entry types, you can stick to one and forget about the other. Or you can as well choose some pairs that will give you this either the first type of entry or the second type of entry. There are some pairs that always give one type of entry pattern, and stick to those pairs. It's going to help you to be focused, and you are going to make some good profit in the market. So it's going to help you to be focused. You will not be moving around looking for trades to take. If you stick to the particular type of pairs that gives this type a kind of entry type for you, it will be excellent for you. So as I advise, please ensure you stick to one type of strategy. Please do not trade every strategy. Don't trade every setup. Don't trade every signal. Don't trade every day. Take your time to study this strategy for at least 1 month and master it before you start using it to trade. It's going to be very profitable. Then the bonus entry type that I said I'm going to show us. Okay, let's look at CAT CHL. CAT CHL. Look at what happened in CAT CHL. We have a key zone here that is inside the Asian range. We have a 50 exponential moving average, 13 exponential moving average, and the 5 exponential moving average. Then we have the 200 exponential moving average lined up. So the smaller is above the, just is they are in order, in ascending order. So the smaller is above the one that is bigger. This one is above this one, bigger than it. This one is above this one. So we have this moving averages lined up. It's kind of related to one of our strategies. So as soon as this happens, we want to see price can come down to hit a zone. You see, it immediately came out after the Asian range. It hit the zone, and just as soon as you see TDR confirmation, the RSI line crosses the signal line, you can take this trade. For the whole day, that trade will run to that direction. A similar thing happened here. It almost hit it, but you understand that you can take this trade. So TDR confirmation, you take the entry, and that is it for the whole day. But you must ensure that all the moving averages are lined up. Look at this. Price came out and dropped here, and at this point, price hits the key zone. The moving averages are lined up. You see that? Moving averages lined up, smaller on top of the bigger, till you get to the 800. So we wait for TDR confirmation. So the confirmation came late in this place anyway. So at this place where the price hits the zone, so you wait for TDR crossing, which is here, you take your entry. For the whole day, price moved. How many pips? 78 pips for the whole day. So that is my bonus entry pattern for you. So I wish you all the best. Take your time to study this setup, and you're going to make some good profit from it. So this one happened when price was here, but the moving average were not lined up yet. So if you have not subscribed to this channel, please do well to subscribe to this channel. Click on the notification bell, and you'll be notified anytime we drop any strategy. Look at here, price drop here, came back to a key zone, the 800 exponential moving average. And at this point, what do you see? You see all the moving averages lined up. With TDR confirmation, you take your entry. That is the bonus strategy. Look at this. Price drop, hits the zone back. If moving averages lined up, take your entry. Now, you're going to watch it to happen at the opening of the London session. Only at the opening of the London session. Okay, this one went far. So please, Forex trading is risky and it's also highly profitable. So the most important thing is follow your setup, follow your pattern, and be disciplined. You will not lose your money. You will not blow your account anymore. So I wish you all the best, and thank you for watching. God bless you. And before I end this video, please, we have a free Telegram channel on link on this, not channel, it's a group, free Telegram group. It is on the description of this video below. You can click on it to get the indicators we are using for all our strategies, and the template are also there. Just join the group, go to the file section, you will get them and apply them. Please do not rush. As I said before, do not rush into taking trade. Study the setup first before you use it. Thank you for watching, I wish you a profitable week ahead.